Welcome, everyone. Just a quick heads up before we start. Everything we discuss today is purely for educational insight. Definitely not investment advice.
That's right. So today we're looking at some automated trading strategies, the top ones for Bitcoin and Ethereum from this past week, generated by the Zen blockchain.ai agent.
Yep, you sent over the code, and we're here to sort of unpack the logic behind them.
Exactly. See what makes them tick.
It's a pretty neat way to get a handle on these complex automated approaches quickly. So, Bitcoin first. What's the core logic?
Okay, so the Bitcoin one revolves around the RSI, the Relative Strength Index. But interestingly, it uses a period of 17, not the standard 14.
Oh, okay, 17. And how does it decide when to jump into a trade?
Well, the entry is, you could say, quite loose. It triggers if the RSI goes below 45 OR, if it goes above 55.
So it's not waiting for those really extreme overbought or oversold levels, more like minor deviations.
Precisely. Acting on relatively smaller moves away from the middle ground. It seems geared towards catching shifts maybe a bit earlier.
Right. And risk management. Is there a stop loss?
Yep, a fixed stop loss set at 3% below the entry price. Pretty straightforward protection there.
Okay, 3% fixed and getting out of the trade. The exit logic.
That also hinges on the RSI. The position gets closed when the RSI moves back into that middle zone between 45 and 55.
Ah, so it enters on a deviation and exits when things return towards that median range.
Exactly. The whole thing, entry and exit, is driven by just that one indicator, the RSI,
Yeah.
with that specific 17 period.
Got it. Okay, let's switch gears to the Ethereum strategy. Also RSI based, I hear, but different.
Yes, it uses RSI too, but quite differently. First off, a much shorter period, just 7. So it's going to be way more sensitive to recent price changes.
7, okay. That's quite short. And the thresholds.
Different too. Overbought is set at 65, and oversold is down at 35. And the entry logic is interesting.
How so?
It only enters a trade when the RSI dips below 35, so only on the oversold side. And it needs to be a fairly strong signal at 35.
So, unlike Bitcoin, it's not playing both sides of the RSI range for entry, just waiting for that dip below 35.
Right. Described as a loose condition based solely on RSI, but focused on that oversold state.
Then the stop loss, same 3%.
The stop is the same, 3% below entry. But the position sizing is where it gets more dynamic.
Oh, tell me more.
It adjusts the trade size to target risking 15% of the portfolio value on each trade. 15%.
Wow, 15% risk per trade is quite significant.
It is, but there's a safety catch. It won't use more than 50% of the available cash for any single trade, even if the 15% calculation suggests more.
Okay, so dynamic sizing with a hard cap. That's a key difference from the Bitcoin one. And the exit for Ethereum.
Also, pure RSI. It closes the position when the RSI climbs above the overbought threshold of 65.
There's below 35, exits above 65. Simple logic, but focused on those extremes with that shorter RSI period.
Exactly. Solely RSI driven, just like Bitcoin, but different parameters.
So, comparing them, Bitcoin uses a slower RSI, 17, wider entry bands, 45.55, fixed stop loss. Ethereum uses a faster RSI, 7, enters only below 35, exits above 65, and has that dynamic percentage-based risk sizing.
That sums it up well. The RSI periods alone, 17 versus sudden, suggest potentially different intended trade frequencies or sensitivities to market noise.
Yeah, the Bitcoin one feels like it might be aiming for slightly smoother, maybe slightly longer moves, while Ethereum is set up for sharper, quicker reactions.
That could be the interpretation, reacting to broader deviations for Bitcoin versus focusing on more pronounced oversold conditions and managing risk quite actively for Ethereum.
The different approaches to risk are fascinating too. Fixed stop for BTC, dynamic percentage risk for ETH.
It makes you wonder, doesn't it, why the AI chose those specific configurations for that particular week? Maybe something about predicted volatility.
It's possible. So, just to wrap up, these were the top strategies the AI introduced this past week. Looking under the hood like this really gives some insight into different ways automated trading can be approached.
Absolutely. And understanding the logic, even as simple on the surface with just RSI, raises interesting points.
Leaves you thinking, for sure.
Yeah, like what might these different RSI tunings and risk approaches tell us about what the AI anticipated for Bitcoin versus Ethereum's behavior just during that specific period? Something to definitely mull over.
Great stuff. Thanks for breaking that down.